Right now, there is an estimated $10,000 in unclaimed government benefits sitting within reach of the average American retiree. Not someday, not if the rules change. Right now, today, in programs that already exist, already have funding, and were specifically designed for people in your situation. If you are over 60 in the United States, what I am about to share could reduce your monthly bills, increase your income, and in one case, recover money you earned decades ago that has been sitting uncollected ever since. And I am not talking about the kind of savings where you clip coupons and feel good about $1 off a box of cereal. I am talking about Medicare costs slashed by thousands a year, property tax bills cut dramatically or frozen entirely, monthly grocery support you never knew you qualified for, Social Security payments potentially larger than what you have been receiving, and in some cases, retirement money from old jobs that is still out there with your name on it. Here is what makes this urgent. Some of these benefits have timing rules. Miss the window and the money does not roll forward, it disappears. And the federal government, your state agency, and your county office have no legal requirement to call and tell you the clock is running. Stay with me until the end of this video, because the final benefit on this list could permanently increase some retirees' monthly income for the rest of their lives. Introduction Credibility Setup 045-130. Before we go any further, I want to be direct about what this video is. Everything I am going to cover today is a real official program, either federal, state, or county level, that exists specifically to support older Americans during retirement. No scams, no workarounds, no one asking you to send money anywhere. These are legitimate programs with government funding already allocated. The only reason millions of eligible seniors are not receiving them is that the American benefit system is genuinely one of the most fragmented, confusing, and application-heavy systems in the developed world. Benefits are spread across different agencies. Eligibility rules vary by state. Many programs require separate applications that nobody tells you to make, and the agencies administering these programs are not in the business of outreach. They wait for you to come to them. I have gone through federal program guidance, state-level eligibility rules, and Social Security Administration data, and I have identified 5 specific benefits that a significant number of Americans over 60 are missing right now. I will tell you who may qualify, what the financial picture looks like, and the exact step required to check eligibility for each one. And if you are not subscribed to this channel yet, please do that now and turn on the bell notification. Benefit thresholds, income limits, and program rules change every year. When they change, the agency does not write to explain your new options. What I do here is translate every update, every threshold shift, every new program into plain language before the deadline passes. Subscribe now so you find out in time to act. Let us get into it. Let us start with the benefit that is quietly draining retirement income for millions of Americans who have absolutely no idea help is available. Medicare is supposed to make healthcare manageable in retirement, but for millions of seniors on fixed incomes, the premiums, deductibles, co-payments, and coinsurance costs add up to thousands of dollars a year. Money coming straight out of Social Security checks and retirement savings every single month. And a significant number of those people are eligible for programs that could cover most or all of those costs. They are simply not claiming them. Medicare Savings Programs, MSPs, are federally funded, state-administered programs designed specifically to help lower-income Medicare beneficiaries with their out-of-pocket costs. Depending on which program you qualify for, they can cover your Medicare Part B premium, which in 2025 runs over $185 a month. They can cover deductibles. They can cover co-payments and coinsurance. For the right person, the combined savings run to several $1,000s a year, every year, for as long as they remain enrolled. Now here is the assumption that is costing people this money. Most seniors who have looked into this and walked away did so because they assumed they earned too much to qualify. That assumption is wrong far more often than people realize. Income thresholds for Medicare savings programs are higher than most people expect, and the calculation is not simply your gross Social Security check. There are income exclusions and deductions built into the eligibility assessment that many applicants never account for because nobody walks them through it. There is also a secondary benefit worth knowing. Enrolling in certain Medicare savings programs automatically qualifies you for Extra Help, a federal program that reduces prescription drug costs under Medicare Part D. That is another layer of savings that activates from a single application. Think about what this means in practice. A senior currently paying full Medicare Part B premiums plus prescription copays could be looking at $2,000 or more in annual savings from one application they never made because they assumed the answer was no. To check eligibility, contact your State Health Insurance Assistance Program, SHIP, which offers free, unbiased counseling on Medicare benefits in every state. You can find your state's SHIP contact at shiphelp.org. Alternatively, contact your state Medicaid office directly and ask specifically about Medicare Savings Program eligibility. It costs nothing to ask, and the answer may surprise you. But healthcare is not the only hidden expense draining retirement income. The next benefit could reduce a bill that many retirees are paying in full when they may not have to. For the millions of American seniors who own their homes, property tax is one of the largest recurring bills in retirement. And in most states, there are programs specifically designed to reduce that burden for older homeowners. Programs that a significant number of eligible seniors have never once applied for. Property tax relief for seniors comes in several forms depending on your state and county. Senior exemptions reduce the assessed value of your home before the tax rate is applied, which directly lowers your annual bill. Tax-freeze programs lock your property tax at its current level so that even as surrounding property values rise, your bill stays the same. Deferral programs allow eligible seniors to postpone property tax payments until the home is sold, which helps those with equity but limited monthly cash flow. And homestead exemptions, available in many states, provide a flat reduction available to any primary resident, with enhanced versions for seniors. The reason most eligible homeowners never access these programs comes down to one thing. They vary so significantly by state, county, and municipality that there is no single national announcement. What is available in one county may not exist in the next. And the local assessor's office, the agency that administers these programs, does not send a letter to every senior homeowner explaining their options. They process applications, that is all. Over a 20-year retirement, even a few $100s a year in property tax savings compounds into a meaningful sum. And for retirees in high-tax states or areas where property values have risen sharply, the savings can run considerably higher. To find out what you may be entitled to, contact your county assessor's office directly and ask specifically about senior property tax exemption, freeze, or relief programs available in your area. You can also search your state name alongside the words Senior Property Tax Relief to find your state's official program page. This is not a complicated application in most cases. It is a form. One form that could reduce a bill you will pay every year for the rest of your time in that home. And the next benefit is one that carries more stigma than it deserves, which is exactly why so many people who qualify never claim it. Let us talk honestly about SNAP, the Supplemental Nutrition Assistance Program, because the stigma around it is one of the main reasons millions of eligible older Americans go without grocery support they are fully entitled to receive. Many seniors have never considered applying for SNAP because they associate it with families in acute poverty. They think of themselves as people who worked, saved, and built a life, and they do not see themselves as someone SNAP is designed for. That framing is understandable. It is also costing them money every month. SNAP is available to individuals of any age who meet income and resource eligibility requirements. For older adults, the picture often looks like this: a modest Social Security check, limited savings, and significant monthly medical expenses. And here is the part most people do not know. For seniors aged 60 and over, allowable medical expense deductions can directly reduce your countable income for SNAP eligibility purposes. That means someone who would not qualify based on their gross income may qualify once their out-of-pocket medical costs are factored in. The average SNAP benefit for a senior household provides meaningful monthly grocery support, money that goes directly toward food, freeing up fixed income for other essential expenses. For a retiree quietly skipping meals, buying cheaper and less nutritious food, or rationing medication to cover grocery costs, that monthly support is not a minor convenience. It is a genuine financial lifeline. The application is made through your state SNAP office. You can find your state's office at fns.usda.gov or call 1-800-21-5689 for general SNAP information. Eligibility is assessed individually. The only way to know for certain whether you qualify is to apply, and the application costs nothing. Now let us talk about one of the most overlooked Social Security payouts in America, one that affects widows, widowers, and even some divorced spouses who have no idea the money is available. This is the benefit with the highest financial stakes on this list, and the one surrounded by the most confusion that has quietly cost some retirees thousands of dollars in monthly income, sometimes for years. Social Security is not simply a payment based on your own earnings record. For married individuals, widows, widowers, and in some cases divorced spouses, there may be an entirely separate calculation available, one that could produce a higher monthly payment than what you are currently receiving. Here is how spousal benefits work. If you are married and your own Social Security benefit is lower than 50% of your spouse's full retirement benefit, you may be entitled to a spousal benefit that brings your payment up to that threshold. This is not an add-on. It is a replacement calculation. And for spouses who spent years out of the workforce raising children, or for family members, it can represent a significant increase in monthly income. For widows and widowers, the picture is different and often more substantial. A surviving spouse may be entitled to receive up to 100% of their deceased spouse's Social Security benefit, if that amount is higher than their own. Many widowed retirees are not receiving this. Some never applied because they did not know survivor benefits existed as a separate claim. Others applied but made timing decisions, claiming early at 60 or 62, that permanently reduced their monthly amount in ways they were never clearly explained. And then there is the divorced spouse rule, which surprises almost everyone who hears it. If you were married for 10 or more years and subsequently divorced, you may be entitled to a benefit based on your former spouse's earnings record. Even if they have remarried, your claim does not affect their benefit or their current spouse's benefit in any way. The Social Security Administration's rules around these benefits are genuinely complicated. Timing matters. The order in which you claim matters. Whether you have reached full retirement age matters, which is exactly why so many people make decisions at 62 or 66 without the full picture and live for years on a check that could have been higher. If you have any question about whether your current Social Security payment reflects your best available option, whether as a spouse, a widow, a widower, or a divorced individual, contact the Social Security Administration directly at 1-800-772-1213 or visit ssa.gov to review your earnings record and benefit options. Ask specifically about spousal and survivor benefit eligibility. Ask about the impact of claiming timing on your monthly amount. That conversation is free. The difference it could make is not small. And finally, the benefit that for some retirees means discovering money they earned decades ago that has simply been sitting there, uncollected ever since. This one is different from everything else on this list because it is not a government program you need to apply for. It is money you already earned. Money that in many cases is already in a database with your name on it, and a significant number of retirees have never once checked. Over the course of a working life, Americans change jobs. They move. Employers close, merge, or restructure. Paperwork gets lost. And in the process, Retirement accounts get left behind. Old 401(a) balances sitting with former employers. Pension entitlements from jobs held decades ago. IRA accounts opened and forgotten. In aggregate, billions of dollars in unclaimed retirement assets sit in databases across the country, waiting for their rightful owners to come forward. The National Registry of Unclaimed Retirement Benefits is a free searchable database at unclaimedretirementbenefits.com, where you can search by Social Security number for any employer-sponsored retirement plan that may have you listed as a participant. Your state's unclaimed property office, searchable at missingmoney.com, or through your state's official website, holds additional dormant accounts, abandoned financial assets, and uncashed checks that may have been reported in your name. The Pension Benefit Guarantee Corporation at pbgc.gov maintains records of pension plans from companies that have closed or terminated their plans and allows individuals to search for benefits they may be owed. The amounts people discover vary enormously. Some find a few $100s, others discover thousands, or in some cases far more, from a job they held for years before moving on and losing track of the paperwork. In every case, the money belongs to them. It has always belonged to them. It simply requires one search to find it. Take an afternoon this week. Run your name through each of those 3 databases. It costs nothing and takes less than an hour. For some people watching this right now, that hour will be the most financially productive hour of their retirement. Let us be clear about what these 5 benefits represent together. Medicare savings programs, potentially thousands of dollars a year in eliminated premiums, deductibles, and copays for seniors who assumed their income was too high to qualify. Property tax relief, hundreds to thousands of dollars annually through state and county programs that exist specifically for older homeowners and require nothing more than a single application to access. SNAP benefits, monthly grocery support available to senior households with modest income and significant medical expenses, carrying a stigma that has no place in a practical financial conversation. Social Security spousal and survivor benefits, potentially the largest single financial opportunity on this list for widows, widowers, divorced spouses, and married retirees who have never had their full benefit options clearly explained. And unclaimed retirement accounts, money you already earned, sitting in a database right now, waiting for a search that takes less than an hour. America's retirement support system is fragmented by design. Benefits are administered across federal agencies, 50 state systems, and thousands of county offices. No single agency has a complete picture of what you are entitled to. That fragmentation is precisely why so many eligible seniors fall through the gaps. Not because they are not entitled to help, but because the system requires you to know where to look. If you only take one action after watching this video, let it be this. Contact your state health insurance assistance program about Medicare savings programs. That one call addresses your largest recurring fixed cost, takes 30 minutes, and the answer to yes or no is information worth having either way. If this video has been useful to you, here are 3 things I want to ask you to do right now. First, check your own eligibility for at least one item on this list today. Not next week, today. Pick the one that feels most relevant to your situation and make the call or run the search. Momentum matters. The seniors who benefit from these programs are the ones who act on the information, not the ones who plan to get around to it. Second, share this video with one person in your life who is retired or approaching retirement. Not a mass forward, one person, a parent, a neighbor, a friend you know is managing on a fixed income and stretching every dollar. One conversation could change their financial picture for years. And if they share it with one person too, the people who genuinely need this information will find it. Third, subscribe to this channel and turn on notifications. Every time benefit thresholds change, new programs open, or Social Security rules shift, you will hear about it here in plain language before the deadline passes. That is the only reason to subscribe, because the alternative is finding out after the opportunity has already closed. One overlooked benefit could change your monthly budget more than you realize. The programs exist. The funding is there. The only step left is yours. I will see you in the next one.